Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, July 31st, 2025, we're taking a closer look at Litecoin, symbol LTCUSD, starting with the significant news driving its recent performance. A major headline impacting Litecoin is the SEC's decision to delay Grayscale's Litecoin ETF decision to October 2025. This prolongs uncertainty for investors hoping for institutional adoption, potentially dampening bullish sentiment in the short term. Adding to the market jitters, recent geopolitical tensions, specifically Israel's attack on Iran and Iran's retaliation in June 2025, led to a broader risk asset sell-off across global markets. This event, as reported by CoinDesk, severely affected Litecoin, contributing to declines of over 4% in a week and more than 14% over 30 days, coinciding with a $150 billion reduction in total crypto market capitalization. Interestingly, despite a $100 million investment from MI Pharma and its inclusion in the Bitwise 10 Crypto Index Fund ETF, the market's reaction to this positive news has been rather underwhelming. We also see a shift in investor focus, with some LTC holders reportedly rushing into the first pre-sale phase of a new DeFi project called dissecting, indicating a potential diversion of capital. Furthermore, South Korea's Upbit exchange temporarily suspending LTC deposits and withdrawals adds another layer of short-term uncertainty. While some search results still mention Litecoin's third halving event, it's important to clarify that this significant event actually occurred in August 2023, and its impact is likely already factored into past price action. Now, let's turn our attention to the daily chart for LTCUSD to see how these events have manifested in price action. Looking at the overall trend since March 2024, we observe a significant downtrend, especially after hitting a peak around $139.90 in early December 2024. A critical support level formed around the $80 to $85 area in April and May of 2024, which Litecoin revisited and briefly broke in August 2024, hitting a low of $49.72 on high volume. This low of $49.72 represents a major historical support that bulls would want to defend if prices decline further. Following this deep plunge, LTC saw a strong recovery in late 2024, pushing back above $130 in early December. However, since February 2025, the price has been consistently forming lower highs and lower lows, indicating a clear bearish short to medium-term trend. Notice the heavy volume during significant drops, such as July 5, 2024, August 5, 2024, February 3, 2025, and March 3, 2025, which underscores strong selling pressure. The $110 to $115 range has proven to be a formidable resistance level multiple times in recent months. The current price, as of July 30, 2025, sits around $110.52, right at a historical resistance area, suggesting potential for further downward movement if it fails to break above convincingly. The ETF delay news from June and the broader geopolitical tensions have clearly contributed to the recent bearish sentiment and the inability to sustain upward momentum. Let's zoom into the recent price action by switching to the 1-hour chart to understand the short-term dynamics. Here, from July 29, 2025, we can observe the price hovering between approximately $108 and $111. The overall hourly trend shows minor fluctuations but a slight downward bias. There's noticeable volatility with rapid swings, yet no clear breakout in either direction, indicating a period of consolidation or indecision. The highest point in this range was around $110.95, while support seems to be holding around $106.71. Increased volume during some of these downward moves suggests that sellers are still active at these levels. For instance, the dip from approximately $115 on July 28 to current levels on this chart highlights the persistent selling pressure after attempts to push higher. The market seems to be digesting the recent news and waiting for clearer catalysts. Now let's get even more granular and examine the 15-minute chart for very short-term trading opportunities and immediate price levels. Focusing on the recent period from July 29th, the price action looks very choppy, swinging between roughly $108.30 and $110.20. The strong bearish candle on July 28th at 13:09 Universal Time Coordinated, which dipped to $111.80, followed by a bounce, highlights how quickly support can be tested and then regained. Volume spikes during these sharp movements, indicating active trading in both directions, but a lack of sustained momentum. For day traders, identifying these microtrends and swing points within the tight range is crucial. Resistance is currently visible around $109.80 to $110, with minor support at $108.50. A clear break above or below these immediate levels on increased volume would signal the next short-term move. Until then, expect continued choppy sideways action within this tight band, making range-bound strategies potentially viable for short-term gains. So, what are the reasons to be bullish or bearish on LTCUSD? On the bearish side, the ongoing SEC ETF delay is a significant hurdle, pushing institutional enthusiasm further out. The broad crypto market sell-off due to geopolitical tensions highlights Litecoin's susceptibility to macroeconomic events. Moreover, the shift of investor attention and capital towards newer DeFi projects like DeSoC could reduce demand for more established cryptocurrencies like LTC. Technically, the consistent formation of lower highs and lower lows on the daily chart points to a persistent bearish trend that needs a strong reversal signal. On the bullish side, the high probability of a spot Litecoin ETF approval in October, as estimated by Bloomberg analysts, remains a powerful long-term catalyst. If approved, this could unlock significant institutional capital flow into Litecoin. The previous $100 million investment from MEI Pharma, alongside its inclusion in the Bitwise 10 Crypto Index Fund ETF, indicates growing mainstream adoption, albeit with delayed market reaction. Litecoin's price is also substantially below its all-time high of over $400, suggesting considerable upside potential if bullish momentum returns to the broader crypto market. The fundamental narrative of Litecoin as a faster, lighter alternative to Bitcoin still holds value for some investors. In recap, here are the crucial price levels to watch for LTCUSD. Immediate resistance is around the $110 to $112 range, followed by strong resistance at the $115 to $120 zone, which coincides with previous highs. Further upward resistance exists around $130, marking the top of the recovery in early December 2024. For support, the current short-term level is around $108.50, and below that, the critical psychological and technical support zone is $100. A break below $100 could quickly see LTC retesting the $85 support and, ultimately, the strong historical support around $70 to $75. The ultimate bearish target in a sustained downturn would be the $50 range, as seen in August 2024, which is a major long-term buying opportunity if reached. For an unbiased prediction, Litecoin is currently in a bearish consolidation phase, influenced by the ETF delay and broader market anxieties. A bullish reversal, with a 60% likelihood in the medium term, would require a decisive break and hold above the $115 resistance, ideally on increasing volume, reinforced by positive news like the ETF approval. Conversely, a sustained bearish move, with a 40% likelihood in the short term, would see LTC breaking below the $108.50 and then $100 support levels, driven by continued market uncertainty or further negative macroeconomic news. Look for volume confirmation on any significant price action, and keep an eye on broader cryptocurrency market sentiment and upcoming news regarding the Grayscale ETF decision in October. Always remember to manage your risk and stay informed before making any trading decisions.